Never-ending challenges. 6-time growth in 1 year. A big hit in Asia. We should call it Fast and Furious FNF.
With Team 5, issue a buy recommendation. FNF has a market cap of 6.9 trillion Korean won, and the stock price is currently showing strong upward momentum. In our DCF-based valuation, the target price is 1.3 million Korean won with an upside potential of 44%. FNF carries on a fashion business spin-off from FNF Holdings. It is engaged in licensing businesses such as MLB and Discovery. Discovery cements a solid position on domestic. Meanwhile, MLB is being a big hit abroad. Based on attractive brand identity, FNF is advancing to the world. Its brands are rapidly expanding their stores in Korea, China, Vietnam, and Thailand. With growing around in all channels, on offline and duty-free shops, FNF is showing signs of moving towards Asia. The reason why FNF can be unique, regardless of the high industry rivalry in the industry, is that three strengths are backed up. FNF is leading the digital transformation of fashion using big data and AI. Since 2018, FNF has been preparing for the digital era from planning to inventory management. This transformation ultimately had a positive impact on investors. After the introduction of database decision-making, they showed record performance in a row with fleece and bag. This has made it possible to adapt well to rapidly changing economic conditions amid the pandemic. The digitalization of FNF has established both its core competitive edge and crisis management capabilities. FNF never misses a shot with appropriate marketing. It captured the market with the use of mass media, such as Street Woman Fighter. Surely, they know what's what in marketing. They evoke both familiarity and a sense of freshness. As a result of its strategic positioning, MV and Discovery generate strong cash flow that supports profitability. This unique strategy is to focus on high value-added areas. The sustainability of FNF is increasing with risk management skills. It has overcome seasonal limitations by diversifying products without cannibalization. Also, it is trying to disperse the concentration of latent risk, which is on licensed businesses. It participated as a strategy investor in the acquisition of the world's top 3 golf brands TaylorMade. FNF will create synergy by adding golf apparel, which was TaylorMade's weakness. When FNF's young brand image and TaylorMade's brand power were to be combined, fashionable rebranding can be expected.
It will be a necessary condition for a fashion company to make a paradigm shift toward ESG management. So we've established our evaluation criteria. As a result of ESG evaluation, we chose 72.3 in the environmental, 71.1 in the social, and 77 in the governance aspect. FNF is located at A-. It is confirmed that the ESG rating as measured by others is underestimated. FNF received high marks despite being an industry with environmental demerit. The use of recycled PET, the trend of saving, and the replacement rate of renewable energy are highly evaluated, leading to a high score on the environmental side. In addition, there are almost no deductions for disposal method because of its inventory management ability. By actively using various eco-friendly materials, it shows that they are superior in terms of environmental management. In the social aspect, it shows a high sustainability in employee training. As a result of a calculation for a quantity of future data, there is no worries for the next 20 years. FNF is actively promoting the growth and development of these employees, not only being earnest in welfare, sponsoring for disasters, and donating periodically, but also they are showing a way of coexisting with local community. It is also highly evaluated in terms of governance. Despite the recent relisting, the ESG committee has been formed and is showing concern for the importance of ESG. Directors composed of experts in each field ensure the efficiency and expertise of its board. Furthermore, FNF is expected to maintain its pre-split dividend policy. self-diagnosing the implementation of 27 detailed standards of governance aspect, FNF shows fine structure. This ESG performance is reflected in the valuation.
As the result of the CF valuation, the target price is calculated at 1.3 million Korean won. The present value of annual FCFF is discounted to 7.7%, the 5-year average of WACC. We calculated WACC by using after-tax cost of debt and cost of equity, including equity risk, country risk premium, and lever beta. At this time, lever beta, which used Hamada formula, was adjusted to market beta after reflecting ESG. We did the sensitivity test taking into account the variability of WACC and terminal growth rate. The minimum price is 1.12 million Korean won, which means that there is still an upward capacity. Generating random number based on the WACC in each year, Monte Carlo simulation result for the DCF target price is found to be similar to the existing target price. The minimum price of Monte Carlo is 984,000 Korean won, which is also similar to the sensitivity test, making our robust recommendation. We also carried out SOTP valuation. In DCF, it is impracticable to reflect Telemate, whose cash flow has not yet been confirmed. For PSR, a peer group was selected in consideration of the characteristics of each business unit. By combining each equity value, FNF's fair value is calculated at 1.65 million Korean won. Being even higher than the DCF's target price calculated except for Telemate, FNF's fair value has an opportunity to increase when Telemate hits the road.
From a financial point of view, it is reasonable to have such a high value. In our analysis, revenue will grow to 1.9 trillion Korean won in 2022. Also, revenue's CAGR over the next 5 years will be 16%. Even though the number of Chinese stores increased 6.5 times in only 3 years, it still has upside potential. MLB China, where sales leverage is huge, shows explosive growth. Thanks to the enormous demand of Chinese millennials and Zoomers, the revenue of MLB China is expected to grow by more than 30% this year as well. FNF's operating margin is about 29%, and net income margin is about 22%, which is the highest among global peers. At the same time, earnings per share will be twofold in 5 years. All of these indicate long-run profitability. We analyzed ROE through DuPont's 5 steps. ROE will maintain a high and steady range of 30% over the next 5 years. Among these 5 factors, EBIT margin is the key factor that maintains ROE high. Although the surge ROE due to financial leverage at a point nominally decreases, it is still high compared to global peers. Upon acquiring Telemate, FNF borrowed 400 billion won, which is 81% of its total assets. By this, some people say they are concerned about the financial burden. However, it's no worry. It is true that the outbound K-score of FNF is in the distortion in 2021. But this is impermanent, and due to high operating profits, it'll be in the safe zone from 2022.
So, 3 things. The first one, FNF is generating outstanding profits by unprecedented high growth and high margins. The second, jumping on future growth engines, solid sustainability is expected. The third, resilience built up by its 3 strengths makes FNF a durable company. Thank you for listening, and we're now ready for your questions.
Okay, thank you for the presentation. A couple questions to begin with. I'll start with the ESG part. You had it looked like a pretty good analysis, but on the first page related to the ESG, you had a whole bunch of scores, right? Where did those come from? How did you get those scores?
In the past, ESG indirectly influenced the stock price, but now it has a much more visibly direct impact. That's why we integrated ESG into our valuation rather than just scoring and ending there. Basically, analysts should provide meaningful information to investors, and ESG is the important information that affects the stock price. For example, one of the most powerful institutions, BlackRock, withdrew their investment from companies that did not meet the environmental standards. So in this case, the stock is affected by worsening supply continuously. So we believe that ESG should be brought into the mainstream, not just used as a secondary resource.
In addition, ESG affects various financial aspects such as revenue and cost of a company. However, it seems to be high in the FNF score, but
Let me interrupt. My question is, I don't have a problem with your analysis. I think you did a good job. My question, to be specific, is on the slide called ESG Standards and Rating, where you come up with the A- score. And there's a whole bunch of numbers on there for recycling, eco-friendly, welfare, employee.
Yeah.
My question is, where did those numbers come from?
Okay, I got it. I got that question. Let me explain that. Most of society value the ESG rating based on data disclosed by the company. So that's the reason the actual greenwashing company also get a high score, because they're showing just good thing on the ESG report. However, FNF hasn't published the ESG report yet because it's been released recently. So we collected not only data from official site, but also atypical data from various channels. So when we looked at ESG factors in detail, FNF doing very well without a single lag. So we believe that when the format is prepared according to international standards, others will also evaluate FNF very high. That's what we think about it. Yeah, thank you.
I just have one quick follow-up on the ESG, and I can't remember, it may have been you that made the comment, but I think you made the comment that the good ESG or the ESG is reflected in the valuation. I think you said that. Isn't that a problem? If it's already in the valuation or it's in the stock, then it's done, right? It's finished, right? So, but you still are expecting a lot of upside.
Thank you for your question. It is possible to think about some pre-reflected, but there to express that something is reflected already in the current price, it must be well known in the market and measurable, and it must be a one-shot issue. However, we didn't evaluate FNF, also ESG, didn't evaluate based on the events such as one quarter performance or just not a official rating. So we think this is an ongoing issue, not a one-shot issue.
Got it. Thank you.
Okay, if I could have a further follow-on question. So just a quick one to begin with. Remember the chart, the bar chart that you talked about, environmental factors usage trend? It says water usage has dropped. It's going to be dropped by minus 350%. So I wasn't quite sure what it means. So how can you go lower than 100% in water usage? So does it mean you're not going to use water at all, or you're even creating water?
Great question. We calculate those by gaining some data from companies' data, and we calculate it by the just the trend. So that's just the number, and we wanted to say that FNF is doing well in the usage of environmental sites.
Okay. I just had to mention that. If you go to the valuation page where it says DCF method on top, and it was helpful to see you got the weighted average of the country risk premium to reflect the current or 2022 revenue ratio in between Korea and China. But if you look at your projections over the next 5-year revenue breakdown, you say China will be even surpassing Korea. So I'm just wondering whether that decision to reflect 2022 rather than overall 5-year would somewhat overstate the target price.
Thank you for your question. MLB China is definitely the key driver of FNF's revenue growth. FNF's revenue is expected to more than double from 2021 to 2025 by the growth of MLB China. It is confirmed that MLB China's revenue grew about 6 times in 1 year from 2020, and then its growth rate will record more than 30% annually. In addition, there is a possibility of Chinese demand incorporation to Korea, such as duty-free sales and travel demand. So we expect MLB China's revenue will be slightly larger than MLB Korea's revenue in 2025. Thank you.
I don't think you answered my question. Because your revenue projection over the next 5 years will assume that China will be even greater than current 25% that's reflected here. So I'm just wondering why you didn't reflect the fact that China will be even greater than Korea over the next 5 years. If you did, this valuation would have come at a lower target price. So I was just wondering why you didn't reflect that.
We're just so sorry. Could you explain?
Oh, okay. So I don't want to waste your time, but I just wanted to mention that your decision to use a 75-25 split in between Korea-China revenue relatively now in that parameter would have upstated your target price. And I don't think that's a very conservative approach. So I just wanted to ask why, was there any reason behind that? But it's okay. I'll leave it to other judges for other questions.
I want to say that this thing is about just WACC structure, and we got it from 2022 for explain it to you guys. So this is just an explanation, and we used the average of WACC. So this doesn't matter at all.
So your valuation shows both methods, DCF methods and SOTP method, but then you somehow chose to ignore the SOTP method and chose DCF number to finalize your target price. Why did you do that?
Thank you for your question. We adopted DCF for the final target price because it is not determined how much TaylorMade will generate its cash flow. Plus, FNF is a company whose business activities are highly important in the future due to its rapid growth. We just mentioned SOTP to convey the possibility of target price to increase when TaylorMade starts its business.
If that's your point, couldn't you apply SOTP method with certain discounts to discount, or maybe even take out TaylorMade part from the SOTP method and still use it in your valuation analysis?
We just thought the FNF's cash flow is highly important. So, but there was a TaylorMade operating cash flow was not just going so to confirm our valuation.
Thank you.
Thank you.
심사해주신 심사위원분들의 심사평 먼저 듣고 그 바로
CFA 리서치 챌린지는 7년 동안 지난 7년 동안은 멘토로만 활동을 하고 테일러메이드
Good job, everybody. I have the results right here. You have to listen to a couple of comments first. First place. Integrity.
Actually, it was eventful preparation for the competition. However, I was able to do it until end thanks to the help of my team leader and team members. With the pride of being Korean University representative, we'll do our best beyond Asia to the world. Thank you very much.
While preparing for the CFA Institute Research Challenge, I have learned a lot in the process of analyzing company using practical techniques. I think that winning this challenge is not the end, but a new beginning. I hope that more challengers do not miss this chance. Thank you.
CFA Institute Research Challenge was an opportunity that allowed me to learn not only research but also teamwork. I would like to thank everyone who has supported us.
First of all, I'm grateful to CFA Society Korea for providing such a valuable opportunity. I'm really honored to compete with outstanding competitors. CFA Institute Research Challenge made me have broad insight and network. And I could improve both academic and practical skills. For 5 months, I put all my heart into this challenge. Certainly, it was worth it. I believe that there is no payoff if we don't try. So we will never stop challenging to win it all.